Okay.
Hello.
Hello to another live episode of the Week. I'm Polly Speaks, strategic advisor here, and I will be your host today. We have a great conversation ahead because we're talking about one of the biggest changes happening in finance right now, the future of tokenized real world assets, AI, and digital markets. And joining me today, Terence, co founder and CCO of X.io, who has spent many years working across traditional finance, market infrastructure, and digital assets. And that combination gives him a unique view on where the industry is going, what challenges still need to be solved, and we will explore how blockchain is moving beyond just speculation, why AI could reshape capital markets, and why Hong Kong is becoming an important player in the digital asset ecosystem. So grab your coffee, settle in, and let's jump into this conversation. Welcome, Terence. Feel free to introduce
Hi,
yourself,
Valley.
viewers or listeners, tell about your personal journey, how you end up in Web3. Maybe you have some interesting failures, maybe some achievements that you would love to share. I'm all ears.
Okay, great. Thanks for the introduction. So, hi everyone. I'm Terence. So, basically, I come into crypto back in I think that's 2020 or 19, something like that. I don't even remember exactly what's the time. So, so before that, actually, I was running a hedge fund in Shenzhen and Hong Kong. Was My background is mainly from technology. We do quantitative trading, we build trading system, and then at the time that when I think it's around like 2019, the market crashed like shit, right? And Bitcoin dropped so much that at some point I think, okay, if this is scamming stuff, the whole industry should be gone, right? Because I mean, people happy with that before. People had some like excitement with that, and then after it bursts out, it should be gone. But then around that period of time, I see there's still a lot of people building stuff from that, right? So there's a lot of new project coming out. So I think maybe it's time for me to really give a try and then switching from TradFi into crypto. So that was the decision that was made, and actually the decision is basically triggered by the crash of the market areas. I see it's a good time to try this thing out. So then I come into crypto, build work on several projects, including some trading project. We were building a trading system. We were also running some market making strategy. We were also running some quantitative strategy, and then end up in building Wu Network, which at that time we will see the market is kind of lack of liquidity. So we have high fin strategy, which can make some money, and then we try to give that advantage back to the client. So we were charging clients CO fee at that time and providing good liquidity at the same time. So that I think that that project at that period of time is quite a good success. With such a small team, that was quite interesting that we can build such a thing, especially when the market was already mostly occupied by the big one like Binance, OK, for B. We still managed to find a small market for us, right? Then after that, I also built a perplex infrastructure called Orderly, and starting from 2023, we see a opportunity in Hong Kong because Hong Kong just finished the legislation of the licensing regime, and I see this consistent trend in Hong Kong to keep iterating on the license crypto exchange area. So I come into apply for the license, and that's where we set up the EXIO. Just to give a brief introduction about what I was doing for the past few years in crypto space. Yeah.
Wonderful, wonderful, Terence. I think it's a pretty interesting journey, and I like that you were honest about doubts at the beginning, but we will come back to that. A lot of people think that everyone in Web3 believed in this industry from day one, like strong believers, but the reality is very different. And you saw the market crash in 2019. Thought it might all be a scam, but then noticed that the real teams were building useful technology beyond meme coins, right? And I think that
Yeah.
that kind of healthy skepticism is actually a strength because it makes you look for real value instead of following hype.
Mm.
So you took your experience from running a hedge fund in Hong Kong and found a way to bring high frequency trading advantages to more people, even while competing with huge players like Binance, Bybit, and other uh, giants in the industry. This is very impressive. And as far as I heard, by 2023, you spotted another opportunity with perpetual DEXs and with Hong Kong becoming one of the first places to provide clearer crypto regulations. I think that the timing made a lot of sense, and it's a great reminder that some of the best founders are not the ones who never doubted the industry, but the ones who stayed curious and look at the facts and built something useful anyway. Very good. I love it. I love it. Though, let's dive deeper. Actually, what exactly what first convinced you that blockchain would become more than just a speculative technology and evolve into a new financial architecture?
Okay. So from my point of view, right, actually since the very beginning, when I actually back in the day when it was like 2019 or 20, at that time when I start to think about, okay, maybe I should come into crypto to study what I can do here, right? At that time, I already start to look into those technology paper. And since myself was from computer engineering background, it's not that difficult to understand what the network is actually building. I also studied some cryptography back in the day when I was in the university, so kind of understand the idea, and then I can also see the potential that this infrastructure will keep expanding, because it's just kind of like a new technology which is more advanced and more open compared to the old one, and then it will just keep spreading out no matter at what kind of speed, right? I see that kind of, it's very similar to back in the day when we are using internet, right? At the very beginning, people was like saying, "Oh, internet is bad," right? Internet is or even the but when I still remember in 2001 when the internet bubble was crashed, like some of the people was questioning me. At that period of time I was in the university studying computer, and then they everyone would tell me, hey, there will not be any ITs, you will have no job, and the internet will be gone. But I was always believe like technology actually once that is built, it won't go away. It will just keep iterating. Same for blockchain. I don't think it's at that when I was just coming to crypto, I don't think that was the perfect state of blockchain. But then I think it will keep iterating, and then from that, if it's a better infrastructure which provide you a more open society, then I expect everyone will just keep trying to be on top of that, right? It maybe not now, but it could be later. So it's kind of like a dark hole where you keep absorbing more and more stuff, and then creating the sentiment and the trend that people would like to be on top of that. And from blockchain, we can see that it since the beginning, like it provide a better settlement scheme. Right, it give you a very great way of owning your asset. You also give you the transparency that you can trust how the way of the transaction of the asset will be done in a very like trustable way. So that's why I think there will be more and more things building on top of that. And I also have an analogy about what I think blockchain is. It's like, so I always talk to my friends, I believe blockchain is more like a barter economy. Right? It's like a barter economy. It's like back in the Stone Age. Like I got some meat, you got some rice. I exchanged the meat with the rice for that kind of situation. But then back in the day when people were doing those like exchange for the goods, right? That is a very inefficient way because there's no technology, there's no internet. So there's the reason you need money as an intermediate, right? But now, because all those things, the negotiation of the price, negotiation of the access of the information of different goods is everywhere, right? So which means the barter economy now is the most efficient way. It's not like the Stone Age, because now I want to exchange something for the other thing. That thing, the A thing and the B thing, they are just basically a token, right? So you could exchange anything to anything through this process, and basically I'm sending you the asset, the goods, right? So I that's why I'm saying that is more like a barter economy. I'm basically exchanging goods between each other. There's no intermediate in between, right? That was not a feasible way, or not a highly efficient way back in the day. But now with all this infrastructure, internet, and then blockchain, all the things, I think that is the best way to like serve the economy, the society. Yeah.
Interesting analogy. I will steal it from you. I love it. But no, I really like the comparison because every big technology seems to go through. Also, I like the comparison to the internet itself because every big technology seems to go through the same cycle of fear before people see its value. The internet was called dangerous and useless by many people at first, and today it's hard to imagine life without it, right?
Yeah.
Especially my generation too. I'm sleeping with phone, I'm waking up with phone, and I'm waking up in Web3 every time. So for me, it's
Yeah.
the same kind of a habit. And now you had an advantage because you studied cryptography at university. I think that this is also worthy of highlighting. So you could see that the blockchain was building a new kind of financial infrastructure, not just another way to trade coins. Though what
Mm.
stands out to me is that you focused on the technology instead of the market hype, and I think that is why your view stayed strong. Today, around 420 million people worldwide own crypto in some form, which shows this is much bigger than a small experiment. And I'm not talking about corporations because we're talking billions. So
Mm.
your point about removing unnecessary intermediates is actually interesting. We're not living in Stone Age, but we're removing intermediaries, and this is the
Yes.
biggest value. It sounds like for you, blockchain was never just about speculation. It was about building contributing to the whole building of a more open financial system that would grow the same way as internet did. That's wonderful. Though I also know that you operated at the intersection of traditional finance and emerging technology during a period when Hong Kong has been redefining its role in global finance. How has your perspective on innovation itself changed as the city moves from being a financial hub to potentially becoming a digital asset hub?
Okay, it's a very great question. Actually, I'm kind of a criticizer for Hong Kong's innovation speed, but to address this question is like so Hong Kong has always been a one of the major global financial hub, right? Not if it's not within the top three, it must be within the top five, I would say, and it's one of the major financial hub that which can allow the Western society to reach into the Chinese market, right? And basically, it's the pace that everything merged together. So same for us. Like before, when I was say they working in the trade floor. Right? Hong Kong already been serving the financial market globally everywhere, and then it's always the main hub in Asia. I see that is that Hong Kong already done so much in the to build itself as a financial hub, but now since the new technology has been coming on, actually Hong Kong went through a long period of time that is lag behind the other places. Take for example Singapore, right? Because Singapore at some point was very pro crypto, and then it's moving very fast. But Hong Kong at that period of time there's so many discussion but no action, right? So Hong Kong's society is always like that. I grew up in Hong Kong. I didn't. I was not born in Hong Kong, but I grew up in Hong Kong. Basically, I studied in Hong Kong. So Hong Kong is always like that. There's so many discussion at some period of time, and then that's why at the very beginning Hong Kong is so slow at catching up this trend, but. As I say, in 2023, the government make announce basically a decision to go into crypto, and then since then there's so many things happening, right? Because there's a regulation about asset management, there's regulation about VATP, the SFC announced the whole framework of VATP guideline, also stablecoin regime, right? It's already in place. Even though it's still moving slowly, but it's at least there's already 2 licenses for the Standard Chartered and HSBC, right? Not just about that. HKMA is also pushing for the tokenized deposit in the commercial banks. So there's a lot of things happening in Hong Kong, I would say, making the whole region super complete. And I would say that back in my previous comments, Hong Kong at the very beginning is moving very slowly, but once the decision is made and the thing is went through the legislation, that is the advantage that Hong Kong will show out, because Hong Kong follow the whole legal framework. Once that is done, it won't turn back. Right, it won't turn back. It will just keep iterating, right? So we can see from for the past 3 or 4 years, even from myself, because I was at the front line of applying for the license with SFC. There's so many new things being announced. I can't even mention all of them now, but it's a huge list, like a lot of details. And then SFC is also moving a lot of new regimes. So this just the most basic thing is that this year on the February, there's 2 important new regime that is announced by SSE. One is allowing the broker to do margin trading, and then that margin trading is basically allowing you to use your BTC and Ethereum as collateral to trade stocks. On the other side, it's also allowing you to use your stocks and as a collateral to trade BTC and Ethereum, right? That part is honestly in a license space. Not much place has this kind of regimes that allow you to do that, because other places the region may be only covering virtual asset, but it doesn't cover security or traditional assets. But in Hong Kong, the region is all under SFC, so which means like we are not just treating virtual asset as an independent asset. It's actually a combined asset compared with all those security and futures. So which allow you in long run, you can combine all these assets in the same platform. That is a very important advantage of a Hong Kong's license region. And then another announcement from Hong Kong government is also ourselves as a VATP will be allowed to trade perpetual, even though up to this moment no one got it, but at least it's a good trend. I see that there's a gradual improvement coming from the Hong Kong government keep pushing the whole things, right? And then that we also see that like as a global financial hub in Hong Kong need to do that. Hong Kong need to implement the whole digital asset to maintain its competitiveness in financial system. Because if we see that like the TradFi financial stuff, right? To be honest, even though a lot of people still think that the stock market or the traditional finance is a global market, but indeed actually is a segregated market. It's really like separate one by one, because think about it, in Hong Kong, most of people won't be able to touch like the stock market in UAE or the stock market in somewhere in Africa, but with blockchain there, right, everything is getting much more fatter compared to before, right? If let's say US managed to get the tokenization done with the Nasdaq, and then everyone globally will be able to access the market, right? The same thing is like if Hong Kong doesn't do that, right, your asset will only be limited to this group of people, and you cannot be accessed as that easy compared to the others, to global clients, and which means like we will be stay in an isolated island, right? Because if US stocks, one of the biggest financial market in actually is the biggest financial market in the world, that is sitting on chain, and which means that all the money will go on chain, right? Our money will all go on chain. So the other market, if the stock market doesn't go on chain, they will be left in the isolated island at some point. So I think Hong Kong also see that change coming. We that's also why EXR, we were also trying to bring as much as possible the TradFi asset on chain through RWA process, because that is the thing that we see there's the change going. Yeah.
Okay. Regarding RWA, it will be my next question. But so far, what I noted from your answers, first of all, I like your view. Your view is pretty balanced because you give Hong Kong credit, but you're also pretty honest about where it moves. Not as fast as you wish, but it's like with every regulations in every country, there's no ideal system, unfortunately, and no
Mm.
utopia. But the city has
Yeah.
always been a bridge between China and the West. You're right. Now it has the chance to play that same role for digital assets. And it is true that there have been many announcements over the last few years. And sometimes you wonder, okay, what, but when does the real action start? Still, once a regulation began introducing crypto licensing in 2023 and now started working on stable coins even several months ago, they announced it, new trading rules, it became clear that this is more than just a talk. Around the world, governments are still trying to figure out digital assets. So having a clearer regulatory path is already a big advantage. And I also
Yeah.
like your bigger vision because you're not only talking about crypto tokens, but you're a future where more real world assets and money move on chain. That's a huge shift, and that's where my next question coming from tokenization to intelligent markets, right? Many firms view tokenization right now primarily as a way to digitize existing assets. Tokenization, from my personal opinion, tokenization is not a problem itself. The problem is how we can negotiate with the institutions to bring all the money on chain, right? But your recent work increasingly combines RWA infrastructure with AI powered systems, which is two times harder for all institutions. Uh, do you believe that the real opportunity is not tokenization itself, but creating markets that can become increasingly autonomous and intelligent?
Okay, this is a tough question. So I share your view that the real challenges is not tokenization itself. Definitely, right? Because think about it, tokenization is just creating a smart contract and then tap that into an asset, right? I think the most get back to the first step, right? Is like we need to ask ourselves, why are we doing tokenization, right? At the end of the day, we want a more efficient trading, right? Easier like access, right? And then a more transparent market. And then this market can also be accessible globally to everyone, right? Through this tokenization, right? But then we also need to question ourselves: is it this asset interesting to others, right? So the thing is that we need to bring some good asset to the market, right? So now what we are doing, right, for EXR, the first, or I would say, right, when we come into RWA, the first step we're trying to do is we try to list a lot of RWA asset. Listing an RWA asset in RWA token on a license exchange is not easy, right? The first one take us 5 months, more than 5 months. There's like tons of document, due diligence, things like that, and compliance debate, right? There's many things. Right? It's not just about okay, I go for a listing. I know the smart contract, I list that, right? There's many documents and due diligence before really the listing happen. But now we managed to list more than like 40 something. It's quite a lot of work, right? Think about if each token take you like 3 months, right? And there's a lot of work. We will keep doing that. We will keep doing that. And then, but at the very beginning, to be honest, the thing is that we want to create a market of RWA. We want to create sense that people see that, oh, there's a change acting as the RWA market to give this sentiment, right? And then the next step is like, okay, we need to have funding the good asset to tokenize as RWA, right? If we're just talking about, let's say we're talking about like US stocks, right? Tokenizations, because there's a lot of people trading US stocks. The question we need to ask ourselves is, what is the advantage you bring to the market if people can just go to IB and send an order to buy the US stocks, right? The advantage is not that much. Instead, we need to try to find out some good asset like some hash fund products, right? We tokenize the fund. We need to find some good private equity project. Right, we have to tokenize those private equity projects. We can also have to find some project from like industrial, like financing stuff, right, or like private credit market. These kind of things that may not be so accessible at the moment to the general publics, right? But if we can tokenize these assets and list it on the exchange, basically we bring those assets to the user for them to easy to invest, right? That is the advantage that we can really bring to the market, and basically we lower down the boundary. And then talking about the AI stuff that we're trying to do, that is one of the projects the platform that we build is called Token Planet, right? Why we do that? Right? It's just at the moment, like most of the thing happening is like, okay, you already have an asset. You already have an asset, and then we put that into a SPV or fund, whatever, and then we issue a token, RWA token on top of that, right? So we want to go for one step further. Basically, say, okay, there's a lot of people looking for fundraising. They're creating a project, right? They're sourcing fund from VC. So we want to match these two group of people together, and then when the VC invests, they right away. They're not investing into a meme coin, not a fake project. It's a real team, a sophisticated team trying to build something, right? And right away they can issue their share as RWA token, right? That is the first step, and then we migrate them into our platform to launch RWA token, and the first and then the next step is like we can allow them to do the token distribution through our platform, because we have the license to do a primary distribution, helping people to run through the subscription redemption in Hong Kong, right? And after a period of time, we can also help those tokens to go for secondary market to gain the liquidity, right? Because we have the VATP license, allow people to do trading through Audible, through the RFQ OTC market. That is the complete process that we want to build and serve to the user. And with AI that could help all these help to carry the project from the step one to step four, right? A lot more easier because we work with Submenfa. Submenfa is a great tool that if you call the project owner and ask for information, gather more information. It's kind of like doing the first step of due diligence instead of like we need to hire tons of people to talk to every project, right? So basically, it's also helping. At the end of the day, it's helping the client to filter out the project, right? Because to gather more information and help them to filter out the project that doesn't make sense, right? That's what we are trying to build.
Okay. Can you repeat the name of the platform that you said just right now? Token Palette?
Token Planet, Token Planet. Yeah,
Token
yeah,
Planet. Okay.
yeah,
Okay.
yeah, Token Planet. Yeah.
We can share the link to the website if it's live with
Yeah,
our
yeah,
audience.
sure, sure. That's nice. That's nice. So, we organize a demo day. I think it's like last week or the week before. There's at least I think we select like 10 projects to come to the demo day. Then they do a online presentation about what they're building. And then we also invite more than 10 VC to go to the demo day to basically give more insight or also help to give some guidance to those projects. And after the demo day, they can also express their interest in investing in those projects. So they can do all these kind of stuff on the platform. Yeah,
Awesome. Awesome.
yeah, yeah, yeah.
I will join the next demo day.
Yeah, sure. I will invite you. I will invite you. Yeah, yeah.
Yeah, wonderful, wonderful. A lot of great news for me personally. I hope listeners and viewers will take some notes from that. But I think that's very important point you said, because people often talk about tokenization as if it's like the final goal. That's it. Like there's nothing
Mm,
there. Furthermore, but when actually it's just a tool. What really matters is whether tokenizing an asset creates new value, it gives global access, or opens investment opportunities that people could not reach before. And private equity, private credit are great examples because they have traditionally been available to only a small group of investors, whales. And I also appreciate that you mentioned that reality behind it, because like listing a real world asset is not as simple as clicking the button. It's not like a smart contract creation, right? It takes
no.
months of due diligence, legal work, and compliance, all these documents back and forth over email, all this due diligence. I understand all the headaches, so heads
Mm,
off to everything that you're doing. This is increasingly hard, but that's why building a real market for RWAs is much harder than simply creating another token or meme token.
yeah, yeah.
I also like how AI fits into your vision, because instead of replacing people, it can help match investors to small projects, analyze opportunities, and make the whole process much faster and more efficient, as you said, from step one to step four. And considering that AI could add trillions of dollars to the global economy over the next decade, combining AI with regulated tokenized assets feels like a very practical step, rather than just like another Web3
Oh,
buzz. Yeah, sorry.
it's
Yeah,
okay. It was a job for a few seconds. It's fine.
sometimes it happens. It's probably my connection.
No
But
problem.
let's talk more about agentic AI as a financial infrastructure. You have been involved in discussions around AI-driven asset discovery, matching, investment workflows. Looking ahead, how do you see agentic AI changing capital formation, investment banking, asset management over the next decade?
Okay, so from what we at the moment, what we are trying to do is mostly using AI as a tools to help with the process, right? Like tools to people to find the information. That I would say is more for operation efficiency, right? But for in long run, I see agentic AI in the way is like basically a agent is another kind of a platform. Right? Let's say EXR, we run a crypto exchange platform. The agent itself is a kind for us. Right? There could be a tons of this kind of agent. They would like to trade on the platform. They would like to basically they can also say I want to raise fund by issuing a token. Right? If we have all those API over there, right? And then they can also say they want to invest in other projects, right? And then they can also trade their own money, right? So basically, this agent is we should be treating that as a like human like kind, right? Instead of just a machine, a tool to the user, right? I think that they will come because now the agents is getting much more sophisticated, right? And then agent owning his own money or basically serving people to make money. At the end of the day, want to trade his own money. That is I think is possible. So, but for EXR, we haven't, to be honest, we haven't implement the proper entry for that because there's some tools that we need to build like MCP and those kind of tools that AI agent can call and then trade. And there's also a challenges that we we have to do such kind of things like because as a regular exchange, the first step is always KYC. The first step is always KYC, and then for agent that we don't know who is this agent itself is kind of difficult for us to serve at the moment. I think that part will be handled on DeFi or simply just on blockchain, and a so let's say if we manage to tokenize, take for example, the gap, the merge point could be like that, right? EXR, we can have to tokenize the traditional asset or real world asset into tokens, right? These tokens basically can be like move around on the blockchain, right? And then agent can basically trade on blockchain to access this type of asset. Agent may not be able to access to EXR directly because they can't do they can't give me a proof of residence. They can't give me their passport, that kind of things. I would say this part will still need more time. It will come in the regulated space, but it already come. It's already there in DeFi space. Yeah.
Valid point. It's incredible. It's so funny. Technology is so far away from the standpoint where regulations are right now, like how it's possible to merge this innovation where AI agents could somehow interact with a licensed exchange, because
Mm.
yes, they can't give you a proof of residence or passport. Maybe there can be some law that a person who official like as an agent who is officially presenting a person and he can verify their documents, maybe very like sophisticated way of that. But I think there will be 10 more years to approve the whole process, if
Yeah.
not 15. Let's see.
Yeah,
um,
there's definitely a gap over there. There's definitely a gap over there. I mean, of course, there's somewhere around to do that, right? Let's say a person, Polly. Let's say you create an account with EXR. You put your API key to the agent, and the agent is trading for all this thing. But to be honest, I think that is not the real the ultimate independent agent, right? Because that agent still belong to a person, right? It's still control a person. But in Norway, I think we will see like agent really just running by itself.
Mhm.
It pays
That's
for its own electricity, it makes its own money, right? It serves us for some provide some service for benefits, right? And but that part, I guess to be honest, the way that these agents will be trading is they will create their own market, right?
yes.
And blockchain will be the market for them, right? Because they can just send money to between each other. They don't really need to go to license exchange as the intermediate. So that really come back to the what the first question we were talking about, the barter economy. Those agents are trading against themselves. There's no intermediate needed. They are sending the money between each other. That's the perfect model for for the for the economy to happen. But the problem is that there's no place for us.
Yeah, but imagine regulators like they're looking at all the things that is going on in terms of innovation. Like, guys, we just handled stable coins. You're talking now about AI agents. We're just not ready for that. We
Yeah,
just gave you some rules for licensing and exchange, and now you want us to create a law regarding AIs not doing KYC or how exactly they should do it. Like, imagine they're just discussing it. It's very funny. But
yeah,
yeah, I think that right now most of the companies they use AI to save time and improve
yeah,
operations. It's already implemented, but I think that your vision is much bigger than that, and it's brilliant. You're talking about the future where many AI agents can analyze markets and find opportunities and even trade tokenized assets on blockchain networks, almost like digital investment teams. That sounds very futuristic for now, but we're already seeing AI becoming part of finance, and global spending on AI is expected to reach hundreds of billions of dollars in the next few years. So, and also I think that your point about tokenized real world assets is important because blockchain creates a place where these agents can operate, right? Even if the regulated assets behind them still need humans for identity checks. So maybe the future is not like AI replacing investment bankers or asset managers, but AI becoming a very smart partner, like a co-pilot that handles the heavy lifting while people make the final decisions. It's a very exciting idea, and if technology and regulations continue to grow together, I think it could completely change how capital moves around the world. We just need to be able to prepare all the regulators for these next steps. Just need more visibility regarding the ideas. But okay, let's also move to one more theme that I wanted to discuss here is the missing layer. Um,
mm,
the the industry often talks about regulation and liquidity and technology as the main challenges for tokenized assets. In your view, what is the most underestimated bottleneck preventing RAAs from reaching institutional scale adoption?
mm. So for institutions, right? Let's see the situation, right? Actually, it's very similar to the problem that we discussed in the previous question. So I also so we I used to run a DeFi project, right? So and then we did got investment from a I would say a crypto arm of a TradFi of a band, right? Not to mention the name, right? So at some point we were discussing about moving their trading ability to the DeFi platform. The immediate question is, can you implement a AML policy, KYC policy, all those things, right? It's not that we don't want to. It's just like if we do that on the DeFi project, it's going to be I would say it's going to be quite disaster, right? So we didn't able to do that, cope with the need, right? So but for now, I would say for a license exchange like EXL, that is basically the gateway for that, right? Because the first thing they ask is, do you have a license, right? do all the KYC AML things, right? We have all those things, right? Because SFC check everything, every single document. There's like thousands and thousands of pages of those operation procedures and policy and procedures, and then we put that in practice. Regulators, auditor, all chat about that, right? So we so basically, my summary about this thing is that the regulations is not a bottleneck anymore now, right? The license all there, right? But the sentiment of the traditional institutions to change their mind takes some time. I think this year we already see a lot of movements, right? We see like JP Morgan coming in very aggressively, right? We see Standard Chartered coming in very aggressively, providing custody, everything from the very front end of stuff to the very bottom end of the stuff, very aggressively. So I see the institution is getting the infra preparation done, because honestly, the license regime is just getting ready within these 2 years, right? And the institution takes some time to change, right? Because they need to solve the problem between internally, right? Their compliance need to be convinced. That take quite a lot of time, right? And I think I would say the most difficult part is about implementing the red tag, right? That is the biggest gap, because take for example, for a license exchange, we may install the KYT system, right? We may install like the market surveillance system. We may install a lot of the red tag that's focusing on serving crypto business. But for traditional institutions like the banks, right, or like the brokers, they haven't have these system implemented, right? Then it takes time for them to get all those things ready. It's not that I'm saying that is difficult. It's just after the turning of the mind, you need maybe 2 years, 3 years, getting all these things done bit by bit. And I see that is happening, right? So I see now is really at the edge of reaching the tipping point, because compliance ready, regulations ready, license ready, and then everyone start to have this sentiment, right? And then they need some time to discuss and implement all these things. That tipping point may come in, I think, 2 years, 1 or 2 years, and we will see a huge money going through from this channel.
I think
Sorry.
yes. So sorry, but I think it's gonna be a little bit more than 2 to 3 years.
Depends on how big the money that you're thinking about.
Yeah, but look, there are trillions of dollars, right? And
Yeah.
tokenized assets right now, how much? 31 billion only, and on chain is like 400 million. That is
Yes.
like constantly moving. This is like a drop in a sea.
Yeah. So exactly. So let's. I think our judgment about the timeline is not that different. It's just about like what is we supposed to be seeing the hope is happening, right? Because when we are thinking about, okay, take for example, if we judge that by the percentage of TradFi asset going into crypto, that will take very long period of time. But if we adjust by, let's say, take for example, if RWA asset, total RWA asset versus crypto, I mean major asset, right? Because for crypto, there's a lot of asset which is, I would say the valuation is kind of not real, right? But the whole crypto markets asset, if these two assets comparatively more or less the same, that already means a lot of things, meaning like TradFi's adoption on crypto infrastructure. And then that basically, I would say that is already seen as successful of the turning, not meaning that we are going from the 1 to 100, meaning really manage to adopt crypto infrastructure into TradFi from 0 to 1. Now it's kind of like from 0 to 0.2, something like that, right? But when we see we like 0.0 to 9, then that is already a very promising things, I would say. So what I also because you mentioned about liquidity, to be honest, I don't think liquidity is the problem now. Because I also do market making myself. I see like the thing is as simple as that, right? Different assets have their different liquidity need. In TradFi, let's say what we mentioned, like private equity or private credit, there's also no liquidity, very bad liquidity, right? But take for if I tokenize, take for example, Citibank or HSBC, right? You can see that the tokenization is kind of like a channel itself only. The liquidity actually sitting on the stock market, right? So if there's a need of the client, they want to buy like millions of the stock token. Actually, the market maker can provide that, right? It's just if you have such need, right? I think the liquidity is not a difficult problem to solve. As long as the TradFi institution come into the market maker, not the user. The market maker already connected. They can connect to the stock market, provided they agree on both sides. That is that's basically very easy problem to solve. I think the major problem is where's the incentive for people to come into to that, right? If you're for traditional institutions, they already have access to the traditional market. If what you are only doing is you're only tokenizing the traditional asset that's already listed on stock market or other places, there's no incentive because they already can trade through the broker through the original channel, right? So which means that we give them a cheaper price, or we manage to tokenize some unique asset which doesn't list on the traditional stock market. So I think it's really about whether we can use the new technology to bridge some unique asset on blockchain. Then there's the incentive coming out.
Okay, okay. I actually like that distinction because I think it challenges one of the biggest assumptions in the industry. People often say liquidity is the main problem, but the reality is that different assets need different levels of liquidity. So there is no single answer. And we have good market makers in place. So yeah, it's not per se that big of a problem, but the bigger question is much simpler. Like, why should people come to this market in the first place? If investors, issuers, and institutions do not see a clear benefit, even the best technology will not create adoption. And history shows that successful financial markets grow because they often offer better access or better returns or lower costs, not just because they use the new technology. So, yeah, it sounds like the real bottleneck is creating the right incentives for people to participate. I like this one. I will steal it as well. Once the value is clear, liquidity usually follows rather than leading the way. Okay, I got it. And maybe the last question that I will have for you for today, Terence, is what kind of a quick advice you can give to the builders out there who are deciding to create a new product in the RWA sphere or at the intersection of AI and the RWAs who want to bring TradFi and DeFi together?
Okay. I think first is I think it's just the beginning for RWA. This route of products to be built, right? There's another thing to be done, right? You see on the market there's like us which are doing the trading platform for the RWA. Some of the project they are building the issuance platform, There's a few in Hong Kong. There's also a few in Dubai. Right, Dubai, because Dubai even have a license for the insurance, and then we also see like some platform like even Binance doing B stock, like A stock, and then X stock. These kind of platform is doing tokenization. In Hong Kong, there's also other platform like Evident, right? So things are happening. From a builder point of view, I would say um, we need to be. I myself believe in this trend. I would say that is the first thing. Is that your vision align with this trend. You see that the blockchain is becoming a infrastructure that may be getting less visible compared to before. Right, compared to before, like you keep talking about, I'm working on Ethereum, I'm working on a chain, but it's like nowadays you don't talk about internet. You talk about TikTok, you talk about Facebook, you talk about the application itself, right? So I would say blockchain itself should be getting more uh, uh, invisible, right? And then the application is getting more tractions, and we need to really build a platform that brings the value to the user, basically allowing them to get a more easier way compared to before to uh, basically allow their asset, the underlying asset, to be accessible to the investor, right? That is the I think is the first and the most important value, right? Because a lot of the process that was built in the TradFi, while you're going through the IPO process, right? That a very lengthy process, uh, and that is for the giant market, right? Other VA can serve not just a giant market, also some small projects market, and then is we need to make sure that but I mean the technology itself is trustable, but the people operating that, or the platform operating, need to also build a trust layer uh, on top of that for people to invest in those tokens. So that 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 will make the things last for long, right? I think that's also the value that we want to bring to the market with what we are building in EXIO. Yeah.
Got it. Awesome. Great advices, and I think that it's a pretty great reminder for everyone, because sometimes people expect that this industry to be fully mature, when in reality we're still at the very, very, very beginning. We're already seeing issues and tokenization platforms and companies like Xstocks bringing more real world assets on chain, but this is only the first chapter. I would say it's even chapter zero before the first
Yeah.
chapter.
Yeah.
uh, and every new market needs time to build trust, infrastructure, enough participants to create momentum. And if you look back at the early internet, many of the biggest companies did not even exist in the first years. And I think that RWAs are in a very similar stage right now. So what matters now is not trying to tokenize everything, but proving that the best use cases can create real value for investors and businesses. And we need to find these incentives for to bring more people in the industry itself. So yeah, it feels like the foundations are finally being built, or that is usually where the biggest long-term opportunities begin. Yeah, and
Yeah.
yep. Sorry, I
It's
lost you.
okay.
But yeah, I think it's time for us to wrap up our today's episode. And I want to thank you, Terence, for sharing your experience and perspective with us. I think we covered everything from blockchain infrastructure to tokenization to agentic AI and the future of financial markets. And I think that one message came through pretty clearly, that technology alone is never enough. Building trust, creating standards, connecting to the right people will be just as important as innovation itself. In the next few years, will be really fascinating to watch as digital assets continue moving closer to the financial mainstream. Thank you, Terence. Thank you. If you have some final words to our viewers or listeners, feel free to speak up.
Thank you, Polly, for the invitation, and then great to talk to everyone here. Hopefully, we will see each other again very soon. Yeah.
Yeah, we will. We will. During conferences or
Yeah.
online. I'm always
Yeah.
here. And
Great.
thank you everyone who joined us live here at the RWA Week, and to everyone watching or listening afterward. It was Pauli Speaks, strategic advisor, and I look forward to seeing you in our next conversation with more of the people shaping the future of finance. Yeah, that's it. Thank you, everyone.
Thank you. Thank you.